Welcome to Insights. I'm Eric. Thanks for joining us again this weekend. We're going to do another review. It's going to have to be silver, and we're going to have to talk about gold in the process. We have some unusual readings that are coming forward here. We're seeing a flip in progress, an FIP in the phase column right at the end of July here, which is going to make gold go into a flip on the first trading day in August. So this is something to watch. We have to frame these with inside the energy builds, and we're going to talk about those in a second. We also see that silver has been up for 14 months. It didn't flip down like gold. It's been producing a 39% return. And the only thing that's kind of holding it up has been the primary trend. But what is interesting with silver is that the energy build here is starting to show a bullish reading. It's at 27% DI, minus 21 for DI2, so that could come up a little higher. And I think we're going to have to take a look at those specifically, and I have to pull up my interactive charts to do that. So while this loads, we'll get this up in a second. And it should be up, and there we go. We see silver's DI. Here silver's DI is at 27 and 21. The thing that stands out is that the highest DI reading within this cycle, as we dissipate this bearish energy build, it's the thing that's been holding back the rally. It's what's created these blocking domes. As this moves higher, and DI is going to have to do that, it's pulling DI2 up. The highest we got was 35% in June, and now we're getting at 27%. We're up there. I mean, it's challenging that high. And if this continues up, it won't be too long before this closes above 60 and this gets above 0, and the computer starts to get interested in silver for the first time in a long time. I've been classifying silver as a frustration phase for many months, but this will likely be the end of it if we can move these two readings up and this one up and move them higher. So if this trend continues, we're also going to need the participation of gold, and we're going to see that gold and silver are entering their seasonally strong period, which is that's definitely significant as well. Gold is also relieving the bearish energy build. It got a lot higher in that first impulse. Now it's down here, and it's still trying to work things up, move DI higher, move DI2 higher as well. So there, you're a little bit, gold's a little bit behind in terms of the energy, or it's either that silver's behind and it's trying to catch up. If we look at the precious metals composite, we can see the overall trend is higher from the bearish setup that we have down here. But we still have more room to go, and we are looking for readings above 60, and we're trying to pull this number above 0. So let's head back to the matrix and try and wrap this up pretty quickly here. We can see that this is an interesting flip in progress. It's a flip in progress that's affecting two markets that are highly compressed. After compression usually comes expansion, and that movement from compression to expansion is often associated with acceleration to the upside or to the downside. That acceleration, or the direction of it, tends to favor which way the primary trend is facing, and it looks like the two primary trends are going to be up. So the question is, do we have enough energy build there to support an upward impulse? Not quite yet, and maybe we're 2-3 weeks away from doing that, and that's something that we have to wait for. But it's if it comes, the setup in gold and silver can be quite powerful. So will gold and silver rally based on a falling dollar and inflation, or will it be a confidence play as deteriorating confidence in government and the government institutions and structures starts to rally both not only gold and silver, but potentially other safe havens, which could also include the dollar and the stock market possibly, or will the bond market act like a safe haven? I think these are questions that we're going to find out real soon, because it looks like the market is setting itself up to move. In terms of the seasonality for both gold and silver, we can see as we flip from July to August here, we start to get in a overall seasonally favorable period. It's all black for gold. We have a couple intervening down months for silver, but in general, there provides two very good months, both in September and December, and it opens up a very strong period for silver in general going once we hit in November for the next 4 or 5 months. So if silver is going to make a move, and if it's going to make a move and start to build an energy, and I suspect the invisible hand knows all this, you're going to see these particular energy builds start to move higher from here. You can click these links and you can pull up the DI charts that we just showed interactively. These numbers are going to likely climb higher, and these are going to probably get near or above zero. And I think you're going to see the invisible hand not following the hype of everyone being bearish and exactly lead the way out of this, and that's who we're going to be following. If we look at the SLV in terms of the price charts and the sticks and bars, there's nothing really to latch onto other than we have a gap upward. That often happens when a market is ready. It's probably going to generate a new reversal within that zone, but it's ready to make a change. So this is tentative still, but I've seen this before. I've seen it just recently in Bitcoin. It looks like silver's going to join the party with Bitcoin quite soon. You can see we have a lot of reversal zones above and below or green, red or above. If we can clear this congestion zone, we have the potential to enter an air pocket between here and here that's quite significant, and that'll be easy acceleration. And silver, which has a tendency to move really quickly, will do so once we go from here to here, if that's where we're going to go. We just have to make sure that we're done testing these lower levels, and that will be tipped off by the size of the energy build that shows up in DI and DI2. The higher the DI and DI2 go as we either move lower or move sideways, the less likely we are going to probe these lower levels. In terms of the pro and public index, we don't see too much here. The professionals are still not buying silver. They're not leading the way. So price is basically grinded sideways, whereas the professionals have been selling mostly within that. The retail has been buying silver, and I think that the retail is still going to have to exit its position in order to transfer control from the weak hands, which is retail, into the strong hands, which is really the professionals. So this is something you want to keep an eye on. You can keep an eye on that here in the pro charts. Here and here, you can click them. Click any of these links here, click this link here, and you'll see some videos and find explanations to everything that's inside the matrix to better understand its content. But what I just described today is the evolution of the trade, how we're following the primary trend, how we're waiting for a reset of alignment up in the daily, weekly, and monthly for them to go into agreement, go from double to triple up. We still don't see triple up here. When we reach that, primary trends are already up, so we're in the alignment and energy phase, which is phase 3. We are waiting for a reset of the 3 time frames to return to up, preceded or accompanied by a bullish energy build. DI readings of significant 60 or higher here, and these DI2 readings above 0 preferably. You could get a large spike without that happening, but we're looking for this to get dragged higher. The higher the DI2 go, the more energy that's available to fuel the next impulse, which that's what we want. We want a profitable impulse to tack on to the impulses here. Silver hasn't flipped down. It's been up for 14 months. It's produced a 39% return, and we've barely moved the needle. These are close to 0 or very near 0, which means the price and time cycles are just at the historical average. There's nothing even significant here yet. So this could easily head higher rather than languish, which the public is expecting silver to languish now. That's what the frustration phase, which is often found in the alignment and energy phase, or phase 3 of the evolution of the trade. People get frustrated. They walk away right before it takes off again. The way markets work is that they take the least amount of people along when something breaks out, jumps the creek or breaks the ice. If it was as easy as making everyone rich, the public wouldn't never work and wouldn't have to receive anything from anybody, because you would just do what everyone else is doing. The whole trick of investing is to know how to stand away from the majority, to be independent of the crowd, to recognize when the trend has been tossed aside, when everyone is frustrated and walked away, and then you stand alone and go buy it. Quite frankly, what we're seeing in silver, and potentially what we're going to see in gold, we're getting close to that phase. And when it does, we'll do a review specifically for silver and gold for subscribers only, but right now we'll keep this one open. So if you want to learn more about the evolution of the trade, come back to the links below this video and talk to us there, or join us on Twitter or Facebook. Other than that, this is how gold and silver are setting up. It's still not ready yet. It's going to need a little bit more time, but you can see the light at the end of the tunnel. So thanks for watching the video, and hopefully you guys will learn a little bit more about the gold and silver markets this weekend, and learn to frame it into the evolution of the trade. If you have any questions, let me know. If not, we'll talk to you guys real soon.